Hey, so I'm going to give you guys a really quick breakdown on a chart that I posted in Discord this morning. So no trades for me today. I didn't hit anything, but it's just, still something that I posted on the watch list, and it didn't have good follow through. So I thought this would make a good video because, well, it's useful. It's useful to study the plays that don't have follow through. Just as important as, reviewing the winning trades, it's important to review losing trades, but also trades just analyzing just what went wrong on the watch list. Again, I did not take this, so it's not a losing trade, but we're going to go into why it didn't have a good follow through, because looking at it in hindsight and studying it, I can see what happened. Okay, so we're going to go into it. So you can see this morning I said Euro CHF is bearish, higher time frame market structure is bearish, and we have a 4-hour level of resistance in here being the old low inside the fair value gap, as well as a bearish order block. This morning we had a Judas swing, taking out those highs followed by displacement lower, aka a reaction off that higher time frame level of resistance. So when I say a displacement lower, a reaction off that higher time frame level, this right here, if you look at where my mouse is moving, that's what I'm referring to. See how it popped up right there? It took that liquidity. It popped up, it took that liquidity, and boom, displacement. All right, so you guys always know when I say I want confirmation, I want that lower time frame confirmation. That's what I'm referring to. The fair value gap confirmation off of our higher time frame level. Okay, so we had that. All right, so this is one of the minuses. Okay, now one minus, we do have equal highs. All right, so we have equal highs. Again, look at my mouse real quick right here. We'll go to my trading view charts here in a second and break it down in there as well, but I'm gonna start off in here. These are equal highs. So what you need to understand is when you have equal highs and you have a very clean level, it's usually not left very clean, or it's not left clean for very long. It usually gets sweet pretty quickly, right? So we had equal highs, that was a minus, and you see that big spike yesterday during New York in today's shooter swing or equal highs. Yep, so we just went over that. All right, so let's go back to my trading view charts. So we're going to start from scratch. All right, so again, let's look at this through the lens of I just opened up my charts. I found this pair. What's going through my head? Well, so we're operating within a bearish market structure. When did we have that shift in market structure on the daily chart? See this right here, this swing low level? What makes this a swing low level? Well, what makes it a swing low level is when we have our lowest low in the middle and two higher lows on the left and the right. Okay, what happens? Boom, we break that swing low level. That represents a shift in market structure. And what happens after we get the shift in market structure? What do we want for it to be 100% confirmed bearish? We need a swing high put in. Right there, highest high in the middle, two lower highs on the left and the right. So we have a confirmed swing high put in, and it's now trending lower. And now we want to see it just continue to tag these lows, tag these lows, tag these lows, tag these lows, and continue until the trend proves otherwise. That's your job, to run out previous day's low of day liquidity. That's your job with this pair. So now we go to the 4-hour chart. This is where we had our higher time frame level, which is very important for me as well. I prefer to have a higher time frame level to hit my trades off of. It's just so much higher probability, so much better. So we have right here at old low inside the fair value gap. Okay, again, if you guys have watched my support resistance series, if you haven't, that is a must watch. Well, really every playlist on my channel is a must watch if you're serious. Everything, market structure, support, resistance, all of it. But if you watched it, you know that whenever we have an old low like this inside of a fair value gap, see this, there's your fair value gap. When you have an old low like that inside of it, it's usually a very sensitive price point. It's respected very, very nicely. So that is a higher time frame level of resistance. But we also have up here, which is our bearish order block. For order blocks, I like to use the body. There's just that's where the bulk of the volume is. The bulk of the volume is in the body, not in the wick. Okay, so basic support and resistance, I use the wick, but when we're dealing with bearish bullish order blocks, I do the body. So this is the body of it. This is where the bulk of the volume is in here. So old low, bearish order block inside your fair value gap. Okay, now did price trade up into a premium within this 4-hour price range? Well, let's see. When we were measuring discount and premium, again, I made a video on that as well. We're going to take it from this high to this low, and we're going to measure that price range. There is 50% equilibrium of that price range. The second that we traded above 50% equilibrium, premium marketplace. Premium means expensive. Okay, so it traded into a premium and tested our higher time frame levels in a premium. Very important. All right, so now let's go to a lower time frame. Now this is one of those things that I kind of skipped over that I shouldn't have. Okay, this was that telltale sign, that thing that, because even though I didn't trade this today, I still studied the chart. I like to go through my watch list just like I do with trade reviews. I like to journal the other pairs on my watches and kind of kind of just break them down. Like, why did it not sell off? Why did it trade up higher? What contributed to that happening? And and once I looked into it, I saw it. I saw what happened. Okay, so we're gonna go into it. And I'm sure some of you probably have already audited, or maybe you identified it this morning. So now, if you remember, that lower time frame market structure shift was on the 15-minute. That was right here. Okay, so you can see we got that shift, and then it came lower. And then boom, it just rocketed up. So why did it rocket up? That's the next question we need to ask ourselves. We need to ask ourselves, why did this rocket up like this and take out the highs? Okay, we've already established that these are equal highs. Let me just note that for you. I've already stated that that was one thing I didn't like about it, because when you have clean highs like that, it's usually not left clean for long. They're usually taken in the future, they're usually taken. Okay, so that was a minus right off the rip. I saw that. Okay, another reason I didn't hit this was because of the news at 8:30. So there was high impact news at 8:30. So with these equal highs, with the news at 8:30, I'd have to trade around that. It's Friday. I'm already green on the week. I had a banger trade the other day. It just wasn't worth it. It just really wasn't worth taking the trade on it. But what was the next thing that I said that I identified later on? Well, that next thing was actually, we need to go back to the 1 hour chart, my other lower time frame chart. I want you to take your attention right here. Look at where my cursor is moving. What is that? That is a shift in market structure on the 1 hour chart, but not only a shift in market structure, a high probability shift in market structure. You get your fair value gap. It broke that swing high level inside of your fair value gap as well, serving as a level of support. Again, remember what I told you just a second ago in this video. When we have a swing level like that, which I kind of covered it up. Let me see if I can get that off. The fair value gap kind of covered the wick. There it is. So when we have an old high like this inside of the fair value gap, it's usually respected immensely when you have that criteria. So we had a shift in market structure. We have this old high inside the fair value gap. We have these relative equal highs right here. And this is also another thing to note. We had a imbalance on the 1 hour up here as well that was serving as a draw on liquidity. Look at this. This had not been tapped at the time that I posted it this morning. It had not tapped into this. It has now, but at the time that I posted it, it did not. That was a draw on liquidity. Or it's still serving as a draw on liquidity, but it's tapped into it now. So let's just say it's not as strong. It's not as strong as a draw. But so look at all this stuff that's kind of adding up here. Now, higher time frame trend is bearish. We do have a higher time frame level right here, and that it is in a premium marketplace on the 4 hour chart. But again, like I stated in one of my other videos, kind of look at price like it's a tug of war match. Okay, we got our pros on one side and we got our cons on another. Okay, and they're just tugging on that rope, and the side that has, or the side that is stronger, is going to win, right? The side that has more stuff going for it, the side that has more things going in its favor. Because remember, price moves in the direction of least resistance. It's seeking that liquidity. So we're kind of like stacking these on both sides. Okay, the pros are daily market structure, bearish. We're trading with the higher time frame trend. We have a higher time frame level of resistance, 4 hour premium. Those are some pros. 15-minute confirmation as well, and it took previous session liquidity, which is nice. What are some cons? Well, we have a 1 hour shift in market structure right here. It's price retraced back down into a discount within that price range. Okay, within a discount within that price range. Rebalanced that price action completely, tested a 1 hour level of support. And this is also another key point you want to note here. Institutional price levels. We had institutional price levels of support. Okay, sure, we had this one down here, which was at the 0.00 level, which is where price found its exact bottom. But on this retracement right here, back down to a discount within that price range, we had that 20 level in there. Okay, it wasn't inside the fair value gap, but right above it, that 20 level of support to help assist it as well. So we have a 20 level of support in here. We have a fair value gap in here. We have a level of support. We have equal highs. We have an upper imbalance. So you kind of see how one side of this tug of war match is starting to outweigh the other. Okay, we got some stuff going for us on this play as well, but there's some negatives that are tugging on that rope quite aggressively. So that's what went wrong this morning, without a doubt, on this play. Okay, it held that. Again, we had that 15-minute confirmation, but 1 hour, typically you're probably going to see that trump the lower time frame. That's typically what happens. 1 hour, We had that confirmation on the 1 hour, 15-minute. You can see it didn't have any impact right here on the 1 hour chart. This is where it occurred. If you look at my cursor on a 1 hour. So we came down, we rebalanced that price action, boom, purged those highs, drew up into that imbalance. That's what happened this morning. That's why this thing did not sell off. That's why I did not tag those lows. Okay. And here's the 15-minute chart. So that is exactly what happened. So it's really useful. Even if you don't take a trade on a particular day, it's still useful to go and journal this stuff. Go and study this stuff. Go and break down this stuff. Take just a little time out of your day, maybe an hour or so to do so. Okay. It's very, very, very useful. And it trains your eyes to see it.